Reg Athwal, and welcome to our channel and another one of our episodes on family business Q&A. So earlier on this past week, I was with a client and we're having a debate around big versus small. Okay, I'm talking about family businesses here. And the debate was really around, is being bigger better? What do you think? I'd love to hear your comments. Make sure you go below and let me know what you think. Is being bigger better in the context of the size of your company? Would you prefer to be a small player in a big ocean or a big player in a small pond or lake? Or maybe a big leader, meaning you're number one or number two in your market, therefore almost like a monopoly in all the oceans that are out there. So this was a recent discussion and really talking about growth, talking about purpose, what's important to us, why do we do certain things. And this led me to doing some research. I actually published an article on this morning, which was sent out to all of our members of our Family Business Academy. And I was talking about the research that I did on Google Ventures. It was fascinating to know that the Google Ventures, if you don't know, is the investment arm of Alphabet Inc., which is the parent holding company for Google. And they invested, as of mid-June 2020, 709 companies today. Imagine that. 709 companies. They've had 190 lead investments out of the 709 and had exits with 147 of those ventures. Incredible. Now, why do I share this? Because most of their investments have been in sectors that already exist. You know, it's not exactly like it's a brand new sector. Healthcare, education, the taxi business with Uber, whatever it may be. These are industries that are already around. They've been around for many, many years. What I've noticed as a pattern is that they're investing in something that's really unique in a specific niche area, or they're creating a new market for themselves by going into a micro niche area, almost like a niche within a niche. And for those of you from the Western world in the US and the Americas, niche, as you would call it, you know, us Brits, we refer to it as niche. So maybe a niche within a niche. And we know Google, you know, have the best of both worlds. They built Google in the first place, became this huge unicorn. As a result of the cash flow, they created Google Ventures and started investing in other startups. But, you know, as far as I'm concerned, it wasn't always like that. It didn't have best of both worlds. From my research and talking to people who are ex-Google, I understand that there were many employees, as the business became bigger and bigger and bigger, it was no longer this family atmosphere. Also got to a point where there was a huge buzz when it was a startup. You know, there's something magical about being involved in a startup early stage and then a fast stage growth business before it reaches maturity. So there were many of those early stage employees that were getting a bit bored. It wasn't about the shares. It wasn't about they're already multi-millionaires. It was that buzz of wanting to start something again. And there's quite a few of them that started to depart the organization, leave. And I'm sure someone at the top thought, you know what, we're losing out on this great talent. We're not retaining these great people who've been with us for so many years. Why don't we look at their new ventures and the things that they have, look at their business plans, and before you know it, Google Ventures was born. So we've witnessed, how does this link in with family businesses? Well, we've witnessed some family businesses and entrepreneurs over the years who are brilliant at building startups from scratch to maybe a 10 million revenue enterprise. I've come across so many owners and entrepreneurs who can build businesses and get to that type of level. Whether it's 5 million, 10 million, maybe at a push, some of them have even taken their businesses to $30 million. But then what? They get stuck, or they get bored, or they can't handle the challenges that comes with a larger organization. On top of that, some of them with their leadership and management styles end up negatively impacting the business. So it doesn't grow exponentially like it may have done in those earlier years. And in fact, it's going to be very much linear growth and even worst case, no growth, probably for the next 10 or even 20 years. And yet, these business owners continue building these companies. They keep saving the company. They keep working on it every day. But if you look at the financials year on year, for some reason, there's no growth. In some cases, it's degrowth. It's going down, it's bleeding, it's got holes in the bucket. But because it's their only business, their family legacy business, There's this emotional attachment, and they don't have other options. But at the same time, within our Family Business Academy group and the clients we work with, our group company RTS Global Partners, there's many clients and members we've come across who have built multiple $100 million to $500 million companies. But they're rare. It doesn't happen all the time in the family business space. So here's my thinking. Here's where I was going with this as I was writing this particular article and now creating this video about it, which is, what are the other options? What should you be considering, in your family group to be more geared up for the future? When it comes to your family DNA, do you have a family DNA which is really great for building multiple $1 to $10 million enterprises? Well, hey, if you had 100 companies built with other people and they're doing $1 million a year, you've built a $100 million empire. Do you prefer doing that? Or do you prefer working with one particular business and expanding that to multiple oceans around the world, whether they're ponds, lakes, or massive oceans, and build maybe $100 million plus organization? What's the right fit for you, and what would make you more fulfilled, happier? That's very important to answer that question. So if you supported potentially the next generation, or you supported maybe employees who've been loyal with you for many years as entrepreneurs to help you build a company, maybe you could offer some of these people, not just the next gen bloodline, but also some employees or people within your community, an opportunity to work with you and come together and help them build businesses. That could be another way of doing this. You could be the lead investor, or you can maybe even create a joint venture partnership with them. This could be an alternative path to build profitable growth. Sometimes there's magic in having lots of small businesses versus a big company with more employees, more headaches. And when you get to the top of your game and you create a monopoly, everybody wants to attack you. You've seen it with Google, you've seen it with Facebook, you're seeing it with Amazon, and it's going to continue with many organizations. So maybe there is some magic here in building lots and lots of smaller companies which have their own entities. And they're typically going to be the $1 to $10 million business, but margins are great and net profits are excellent. And they own their niche or micro niche. So choose, what do you prefer? And as we're talking about family businesses, maybe there's an opportunity to take something from Google Ventures and ask yourself, should you shift to that operating model as a family office? It's a different way of thinking, a different way of doing things. Remember, there is no right or wrong way of building your family business or your family office. However, so many families, like I said earlier, get attached to this one business or get stuck. So therefore, they don't have enough options maybe to even exit at the right time in order to bring that cash back into the family fund for maybe new reinvestment or regeneration paths. So I'm going to leave you with 6 questions to answer as a family to expand these thoughts, maybe around the dinner table, okay? Come together and maybe answer these questions. Number 1, are the current generation capable of building large businesses or not? Some people are not set up to do that, and yet you're grooming the next generation maybe to take over that large business, but they're not capable. You may want to continue with professionals. That could be the choice. But is the current generation capable or not of building large businesses? Is the market still big enough to continue growing the existing family legacy business, or is it time to exit? Question mark. Would you prefer to build and or invest in many startups and niche-based businesses giving you reasonable profits, or stay grounded by being focused on growing one big company? And if it's yes, why? In either one of those scenarios, why? Get to the purpose of why. Number 4, does becoming bigger and expanding further equal more profits for the family or not? Sometimes, I've come across businesses, looked at the financials and discovered as they want to become bigger and they want to grow and they're driven by this purpose of growth. But in reality, when you look at the numbers, that growth does not equal profitability. It could be squeezing their profitability. So you've got to get clear on, does becoming bigger and expanding further equal more profits for the family or not? Are profits important to the family, or is it about accumulating more cash flow from assets? Is it about cash flow? Is it about profit? Is it about balance sheet strategy? You need to decide which direction you're going as a family business. Other things to consider: when do you generate the most profits as a family business in the past? So in the past 10, 20, 30 years, when was your peak? When was your peak of when you generated the most profits as a family business? It could have been 5 years ago, 10 years ago, 15 years ago, but when you had that structure, maybe you didn't have all those branches or offices or outlets. You didn't have that big HQ. You didn't have all of those vehicles and fleet. There's a lot of things that you need to consider here, because sometimes you can have a smaller business, but it's more profitable. You just got to make a decision. Is that important? Could we take anything? Lastly, to leave you with, how were you structured in the past? And is this something you can take from that past operating model and bring it into the present? How has it changed in the present? Maybe what I'm talking about from the past is not relevant anymore. Things have moved on. But in some cases, there is some things you could do from the past, bring it to the present and rethink and come up with a new, maybe hybrid model, but still be profitable. So these are a few things that I want you to consider. There was one last, I did say 6. Formally, the last question I had here is, do you want to diversify with your business interests? Because some people end up building family business conglomerates, or, and based on a checklist or maybe some sort of specific investment criteria. And then you decide whether that investment fits within your diversification plan. Or do you stay grounded? Do you stay grounded and focused on building businesses that are linked to your core expertise? And within that core expertise, you own all the different parts of that entire industry ecosystem. Because like a spider's web, there could be 15,000 different things you could be doing from your core that is all linked. And you decide that you want to dominate in that space rather than moving from one industry to a completely different industry. So that would be the last question to answer. Think about diversification versus staying grounded and focusing on your core business. So these are a few things that I wanted to leave you with today in this short video. Do a proper deep dive into this. Come back next week where I'm going to be talking a little bit about building a startup or expanding an existing business and looking at those niche areas or micro niche areas to make sure that you can reignite growth again for your business. So on that note, thank you very much for watching, and bye for now. Thank you.